Good day, everyone. Today, we'll be talking about order block, order block, and order block in SMC. So let's just wait for others to join this live, and we'll be explaining order block, a valid order block, and the most essential things that make an order block to be valid. So now, so what is another block? So we can define another block as the last candle formed before an impulsive movement. Now, we'll be explaining that in a very simple way. Order block is the last candle formed before an impulsive movement. Now, what causes an impulsive movement in the market? So now, an impulsive movement is caused in the market because of institutional footprints. Like institutional trader, when they come into the market, they leave footprints, which which leads to the which leads to the massive move. So now we have a lot of things to validate. Everything we are doing here, we'll still go into the chart to verify it so we can understand very well. So we have a lot of things, a lot of criteria to validate an order block. Now we have an impulsive movement. That is the first thing to validate another block. So another block, so to see a valid order block, anything, any like another block, like any candle before another block may be of any color, maybe, and the impulsive movement was bullish or was bearish. So if okay, now if there is a bullish impulsive movement, there may be a bearish order block before the impulsive movement. So now another block can be of any color or of any direction. Now, to validate another block, you must have an FVG, which is fair value gap. You must have liquidity and everything. So we still validate that uh, in this video, in this live today. So let me just now. This is an impulsive movement. If you can, this is an impulsive movement. So this is another block. Now from here, this is another block. Why? Because there is an impulsive movement which leave the footprint of the institutional trader, which leave it around here. So we can see the gap between this other block and this candle, the second candle. That gap is called fair value gap. The gap in between this other block and this second candle is called fair value gap. Now, how do I know maybe this other block is valid? Because this other block is formed here. Wait, I'll show you how I know that this other block is valid. I wanted to label it, just want to label it so you can know that this is another block. So now, this is another block. Now to know maybe this other block is valid, it must has something called fair value gap. Now, this is our fair value gap. This is our fair value gap. So already see this. This is a fair value gap. The fair value gap is a footprint left by the institutional traders. So now we can see it's a gap between the other block and the next candle. You can see there's a gap between this other block and the candle next to it. So that which is the fair value gap. Now, other things other things to validate our order block, it must have a liquidity and it must have a valid break of structure. So let us just use something like a demo for an example. So now there was an impulsive movement to the upside. Then let's just say to the now to validate, maybe we have our other block here. We have our other block here. So to validate maybe this other block is real, or maybe you just want to lure us into the market, we have to do first thing to check, make sure the other block has a very valid break of structure. You can see that this other block has a break of structure. It actually broke the structure to the upside. It also formed another break of structure. Now it formed a break of structure. Now it must have a fair value gap. Like I told you earlier, a fair value gap is a gap between the other block and the next candle to it. Maybe it is bullish order block or bearish order block. Now this is other block. Maybe there's another candle, the tip of another candle from here. And any other block that doesn't have a fair value gap is not valid. Now it must form a liquidity. Now we have a three type of liquidity. We have trendy liquidity, and we have let me just say we have two type of liquidity. We have trendy liquidity and consolidational liquidity. So now a trendy liquidity is when a market is trending up. Maybe a market is moving in a trending manner, is moving upside or is moving downside. This is a trendy liquidity. Now we have another type of liquidity whereas the market is not trending. The market is just moving in an equilibrium. So it's moving in an equilibrium. This is a consolidational liquidity and this is a trendy liquidity. Now, so to validate an order block, it must have a liquidity. It must have a liquidity. To validate another block, it must have a liquidity. Now, according to this one that we are using for an example before, so this one has a trendy liquidity. To validate an order block, it must have a liquidity, it must have a fair value gap, and it must form before an impulsive movement. And any other block that has been mitigated before is not valid. So to validate the other block must be fresh. It must have not been mitigated before. Now you can see this our other block here. It has a liquidity valid, it has a fair value gap. Now, so we can even see this place like this type of this place is called inducement. It lures trader into the market. It fool you into the market, then I'll take you out. So an inducement took you to make you think it's a valid order block. So this is our inducement. So inducement is also one of the things to validate another block. So now from here you can see the market. When you have inducement in the market and the market is moving in a very peaceful mode and there is no news, there's no anything, so the inducement will always push the market upward a little bit. It will push it upward and give you a little bit of profit. So it will give you a little bit of profit, but it will later clear 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 you. So and move to your main order block before it hits your full TP. So now let me show you example on one of the trade I took earlier. So we will see what I'm talking about. You can see this is one of the trade I took maybe 2 weeks ago, because I don't usually trade gold. I don't usually trade BTC. So now I took this trade on 15-minute time frame. So just to explain all the concepts of order block. Now, like I said earlier, like order block is a candle formed before an impulsive movement. You can see around this place, you can see there is a little bit of candle that look like hammer, that look at like hammer in this area. So this candle was formed before the push down, before an impulsive movement to the downside. So this is another block, but this is a bearish order block. So now I have to mark it out. So I mark this other block out. This is a bearish order block. So I spotted it out. So and I wait for market to come back and retest. So market actually forms something like so the market go downward and look as if it won't come back again. But when I see the other block and I know the market is trending downward, I know that the market will surely come back and we test it. So this trade actually took me up to a week before it reverses and hits. So now let's analyze XAUSD using the concepts we just explained in this video. Let's analyze XAUSD. So I usually do my top down analysis from daily time frame down 15-minute time frame. I do my aggressive entry at 15-minute time frame and do my confirmation entry at 2 minute time frame or 5 minute time frame. You can see there's a massive footprint. This is caused by news. I believe it's caused by news. So so now if I'm to this movement is caused by news. So I usually do my top down analysis from daily time frame, and this is my daily time frame. As you can see, the market is pushing up, which means the market is going upward. So this, as you can see, this candle here is another block. It's a failed order block that refused to push the market downward. At the tip of this blue candle here, it's a failed order block that refused to push the market downward, which means the market might have changed bias. And we can see this blue candle is a very strong bullish candle. It's a very strong bullish candle, which indicates that buyers are in control. So now this other block has failed, and this bullish candle is showing that the market is uptrend, and we can just classify this place as breaking of structure. This is a break of structure. This is a break of structure to the upside. So now we come down from daily time frame, we come to 4 hours time frame. When we come from daily time frame to 4 hours time frame, you can see the break of structure. You can see the break of structure in 4 hours time frame, which shows that this market is actually uptrend. Now we can mark this out as another block. This is another block. This the other block that lead to the breaking of structure, and is the other block that leads to the impulsive movement, which lead to the breaking of structure in this market. So now this market has not formed liquidity yet, no inducement, nothing to confirm its value. The only thing that validates the other block is it forms it forms a fair value gap, and this is a fair value gap between this place and this place. But entering this market from 4 hours time frame is not normal. The your stop loss will be unbearable. So now we have to come down to 15-minute time frame. This is a 4 hours time frame. We have to make the market to reverse into this zone and go back, so we can take buy on the market. And if you even see any changing of character from the upside, you can sell, but it's safer to follow the trend. So now this is a 4 hours time frame. We can keep doing our top down analysis from 4 hours to 2 hours, just spotting out the key zones, the key levels. The other block, you can still see that our breaking of structure still hold from the daily time frame. Let me change it. Let me reduce my breaking of structure from here. Let me reduce it here. This is my break of structure. Now you can see that our other block has changed direction. So from a whole lot of candle, it has changed to just one candle. But this is 2 hours time frame. We have to come down gradually to to 15-minute time frame. So now this 1 hour time frame, we have to come down to 1 hour time frame and adjust until we have to come until we come down to 15 minute time frame. This is a USD. Please, if you are enjoying this live, just like and subscribe to this channel so this video can also be recommended to other people. So now this is a 1 hour time frame. I don't trade on 1 hour time frame, but this is a very valid zone where we can just wait for the market to reverse into this zone and hit our FTP. I believe this market can give us up to 1 to 6 weeks to reward. I can see we have a valid break of structure. We have a valid break of structure. We have our other block. We have our impossible movement and our FVG, and we have our liquidity. No, but I just want this market to form a very good liquidity before I will be able to enter this type of a trade. Now, before I will be able to take any action, I have to come down to 15 minute time frame, which is my entry time frame. So in 15 minute time frame, you can see that everything look alike from the daily time frame. It's just that we have been adjusting our other block to be able to fit with our current time frame. So now, if I am to do aggressive entry, I already have my fair value gap intact. So I'll just wait for the market around this place. Then I'll mark this place as an inducement. Mark this place as an inducement and my liquidity zone. So now, what we are just doing this, what we are just doing now is just learning about the other block. We learn about the liquidity later. So now let me explain something to you. The market, this place look like an under block. It really look like another block because it did a breaking of structure to the upside, and it also did a changing of character to the downside. Now, this place may trick you to enter the trade, but this place is not a valid order block, it's an inducement. What the market will just do, it will just come down and tap that level and go back and go back, then clear you. So that's how inducements work. So now you won't fall for that trick. So now from here, let me map out everything so it can be understandable. You can see that we have a valid breaking of structure from here, a valid break of structure that was caused by this other block. So apart, we have another break of structure here. We have another break of structure, then another break of structure to the upside. Apart from that, we also have a changing of character to the downside. This is a changing of character. We have a changing of character to the downside. But this changing of character was took out and the market was currently in range. So what I'll just do here is that I'll just I'll wait for the market here. I'll wait at this place. I'll wait here for the market. But if I see another changing of character, for example, if the market move from here and clear out this inducement level if possible, the market left another block here. So if a market left another block here and clearing out this inducement means it has changed another character after the this break of structure. That means it has changed another character. I can just sell and counter trade from there. So what I'll be looking at is the market to tap into this place, this zone, so I can buy, or the market to do another change of character so I can sell from this level. So this is just my analysis on gold for now, and I'll be taking this trade. So I will I'll be taking this trade. Now let's analyze another market. This gold, we'll currently analyze gold. So let's analyze BTC USD. BTC USD doesn't look like it has any setup, but let's check JPY. This JPY, like I said, I always do my analysis from the daily time frame. I go to the daily time frame to do my top down analysis. So checking JPY from daily time frame. This is my JPY on daily time frame. I wanted to change this. I want to change my broker. So now, so we can have the clear view. This is JPY on daily time frame. You can see that the market previously reacted from this demand zone, from this supply zone. Now you can see this is a support zone. So the market recently reacted to this support zone before it moved to the upside, up, upside. So now you can see the market has done some internal changing of internal break of structure. This is just to confirm the direction of the market. The market has did some internal breaking of structure, and this breaking of structure is pointing to the upside, which means the market is currently bullish. So now this is daily time frame. I just check the market reacted to this place, and it is also possible for the market to react to this order block, because this is a valid order block. Now, the reason why this order block may not hold is because this market is actually uptrend and this order block is bearish, but that doesn't mean I don't usually trade around the resistance or around the support. I don't usually trade around resistance or support. So, but the market now, this market may react to this order block, but currently the market is bullish. But because it's the daily time frame, if we move down to 15-minute time frame, we may see an opportunity to enter this trade. So now we are coming down to 4 hours time frame. Coming down to 4 hours time frame, we can see this is a valid order block. Like I said, market may react to this order block. So we have to adjust everything. We have to map it out from the daily time frame down to the lower time frame. We have to adjust. Then so let me delete this. So market may react to this. So we can go to 15-minute time frame. Maybe we can see any opportunity to buy to the upside. So now this is what I can map out. I map out this on the 4 hours time frame. This is another block. It's a bearish order block from the 4 hours time frame, and it has a valid fair value gap. This is the fair value gap from the 4 hours time frame. So now this is an impulsive way. It forms a fair value gap. It has a liquidity, has everything. So this order block at the upside is very valid because now it has everything that another block need to be valid. It has a fair value gap, it has liquidity, it has everything. Now we won't just jump into the trade. We have to confirm. So now I have to go down to the lower time frame to check. Maybe I will see any other block just to buy the market to this bearish order block at the 4 hours time frame. So now what I will do to this other block, at my lower time frame is just that I have to wait for the market to tap in the other block at the higher time frame, which is 4 hours time frame. Then I'll go back to 15 minutes to look for any changing of character that I can use to sell the market. Now, so I have to go. So I used to do my top down analysis, daily time frame, 4 hours time frame, 2 hours time frame, and then 15-minute time frame. As you can see, this other block is still valid. So, but before we can just validate the other block, I just want to zoom in. Maybe it really has a fair value gap. Now, no matter how a small an FVG is valid, no matter how small the gap is, the FVG is valid. You can see that this fair value gap is so tiny, but it's still valid. The gap between this blue candle and this candle, this is the gap between them. Let me map it out. This is the gap between these two candles. You can see, because this is a 2 hours time frame, when we go back down to 15-minute time, you can see that is a very wide, that's a very wide, wide area. So now I'm looking for this market to tap into this place so I can look for changing of character on 15-minute time frame. So now I'm also looking for another block to buy to this a bullish order block to buy to this zone. So I don't have any clue here in the 2 hours time frame, but I can still map something out. This is what I can map out in the 2 hours time frame. This is another block. So I can wait for the market to retrace into this zone and buy to the upside. But I won't do that now because this market doesn't have liquidity, it doesn't have anything. It only has two criteria, and I have to meet all my criteria before I can enter. I have to meet have FVG, I have to have breaking of structure, liquidity, and sometime inducement. It's not necessary, but you can see this other block only did a breaking of structure. It only did a breaking of structure. It only did breaking of structure. So breaking of structure only is not enough for me to validate a valid order block. For me to identify a valid order block, it only did a breaking of structure to the upside. So that is not enough for me to validate a real order block. So I have other confluences like a liquidity, like so let's just go down to 1 hour time frame. Maybe we can still see another opportunity. Now this is our 1 hour time frame. It's still almost the same thing. There's no liquidity, there's no anything. So I usually enter my trade at 15-minute time frame. 15 minute, this 15-minute time frame, this 15-minute time frame, or GPP, JPY. So as you can see, the area where has been spotting out from the higher time frame is not even valid in the 15-minute time frame. So now we can still see our valid order block here in 15-minute time frame. This is a valid zone from the 15-minute time frame. Like I said earlier, I said to spot out a valid order block, it must do a changing of character, or a break of structure. We can see that this is a break of structure. Let me adjust it. This is an under block in the 15-minute time frame. It did a little break of structure around here. It did a little break of structure around here. Now it has a very valid fair value gap around here. This is a valid fair value gap. It has a fair value gap. It did a breaking of structure. Now, like I said earlier, we have what we need to validate another block. Like we need what we need to validate another block, and we need a fair value gap, a breaking of structure, change of character, or liquidity. And this is liquidity. We have trendy liquidity or consolidational liquidity. You can see this type of liquidity here. It's called trending liquidity. The market is trending. It's trending upward. It's trending upward. You can see it is trending. But when the market is moving in equilibrium, it calls consolidational liquidity. Now, this market has formed a liquidity now. It has an order block, and it also formed a liquidity. Now, what I will be expecting the market to do here right now is just for the market to reverse to just do something like this, reverse into this zone and enter this zone. So now this is what I'll be expecting for the market to do. Now, if you are following us from the beginning, you can see that we spotted out this large order block around here. This large order block around here, we spotted it out from the 4 hours time frame. We are looking from we have been tracing down this large order block from the higher time frame. We have been tracing it down from the higher time frame down to this 15-minute time frame. Now, I'll be just not to waste our setup. So I will buy from here to this area. You can see this is a trade that deliver a lot of risk to reward when you want to place your stop loss. So let me just teach you something. Whenever you want to place your stop loss, you have to place it a little bit below your order block. So that because some brokers are very bad, so the spread won't take you out. So you have to place it a little bit below your order block. Now we have a trade of 1 to 7 weeks to reward. So now when the market reverses, if possible this market reverses to this zone, we get up to 1 to 7 weeks to reward. And when the market tap into this zone, maybe for example the market reverses to this zone and tap here. When you get to this zone, because this place is a very valid place, it's another block that has been tracking down from the daily time frame to this 4 hours time frame, if you have been following us. So if the market tap into this place uh at 4 hours time frame, I'll just look for a changing of character. I won't just rush into the market. If the other block tap into this zone, according to my top down analysis, that zone is a valid order block from the daily time frame or the 4 hours time frame. So I'll just come down to this 15-minute time frame, look for a good changing of character that meets all my criteria, and I will enter for sell. So because the market is trending upward, I won't when I sell, I won't target a large extra reward. I will just target 1 to 3, 1 to 2, or 1 to 4 extra reward. So because I'm trading against the market. So whenever you are trading against the market, don't target don't target a lot of don't target too much profit. Just target at least 1 to 2 weeks to reward whenever you are trading against the market. So that's that about that on GBJPY. So let's check other pair. Let's check something like USD card. USD card. This is a USD card. What I'm seeing here is very different. So let's check USD card. Please, you can subscribe to this channel to support us. So small channel like us, yours on your support, on your subscription. So you can subscribe, please. Um, this is a USD card on a daily time frame. According to what I'm seeing here, this is a pure downtrend, but I won't just confirm that this is a pure downtrend. I have to do my analysis. You can see this market has been moving in a very unpredictable pattern, and it leaves no fair value gap. This market is a very balanced market. It shows no fair value. When market is moving with no fair value gap, now the market is not reacting to anything. So what I have to do is that just to pick out the closest order block because we are in the daily time frame. Since the market is trending downward, and I have no other block to push the market upward, or any resistance level to push the market upward. You can see this is a rejection. You can see this is a previous rejection from the daily time frame. A rejection like this won't just form itself on the daily time frame. There must be something that leads to this type of a rejection in the daily time frame. So what I have to do is just to spot out the reason why this rejection was formed. So I can see that here around this place, this is a resistance level. This resistance level actually leads to this rejection. Yeah, when you see a candle that melts halfway, that's a rejection. So this resistance level actually leads to this rejection. It makes the market to reject itself to the upside. So now what I'll be doing here is that I'll mark this place as a resistance level, as a support level. Sorry, so support is below and the resistance is above. So I'll mark this place as a support level, and this support level leads to the rejection of the market. Now, this because the market is downtrend already, I'll be interested in selling in shorting the market just to sell. So I may pick this place as my nearest order block because this is a daily time frame. When I go to 15-minute time frame, you see how wide it is. So I'll be picking this area as my order block, picking this area as my order block because this is the closest area. So now I'll go down to 4 hours time frame. You can see I do my own top down analysis from daily time frame, 4 hours time frame, 2 hours time frame down to 15-minute time frame. So now in the 4 hours time frame, let me check how valid my resistance level was. We can see the resistance level is valid. Support level, sorry, this is the support level. The support level is valid. This is something like a support. This is a key level, and the market actually reacted to the key level which formed this rejection, and that is a support. So now the market is currently down, going down. That means the market is trending downward. I won't be interested in buying the market right now. So all that I'll be interested in is just selling. So until the market change bias. So now what I will do here is that I will adjust I will adjust my other block from the daily time frame to fit in the other block at to fit in the other block at my 4 hours time frame. You can see this is my 4 hours time frame. I draw this other block from the daily time frame. Now I make it to fit in the other block at my 4 hours time frame. Now you can see the market is trending downward. So I'll be interested in shorting this market. Now this is the only clue I get from my 4 hours time frame. I can also see a breaking of structure to the downside. This is a breaking of structure to the downside from the 4 hours time frame. It's a call any breaking of structure to the downside is called a bearish breaking of structure, and we have some internal break of structure here which I will not mark out. This is a break of structure to the downside. So now for my 4 hours time frame, I have to come down to the 2 minute 2 hours time frame to also spot out to map out the key levels. So now I have to adjust my 4 hours time frame order block to suit perfectly with my 2 hours time frame order block. You can see this is a valid order block at the 2 hours time frame because it has many valid reasons to call it a valid order block, because it has a fair value gap and also has an impulsive movement, because impulsive movement actually leads to fair value gap. Impulsive movement always lead to fair value gap. Now so I spotted out this on my 2 hours time frame. Now I have to come down to 15-minute time frame. 15-minute time frame is where I do my aggressive entry and I do my confirmation entry at 3 minute or 5 minute time frame. So coming down to 15-minute time frame, then I have to adjust. You can see just I will mark this place as my POI. I will mark this level, mark everything as my point of interest. You can see that is the origin where the other block actually came from. That is my origin, and I will just mark everything as my POI because the other block is very small, and so I will just mark everything here as my point of interest. So let me adjust my breaking of structure to suit the 15 minutes. This is my breaking of structure to the downside. I also have another breaking of structure. Sorry, I have a breaking of structure to the downside. I have a breaking of structure to the downside, and that is I also have another tiny internal breaking of structure to the downside around here. So now when the market break out this breaking of structure, a very little breaking of structure that is around here, when the market takes it out to the upside, this and the market, that means the market will form a changing of character, And if I see like this to validate this other block, like if any other block is now formed around this area or above it, that will be another block that leads to the changing of character. So now, since there is no changing of character, so and we have a lot of other block here, we have another other block here, and we have another block here, which actually pick all that area as my point of interest. No, now what I will do here is that when I have a lot of other block, you will be confused. You don't really know the one you wanted to trade out of all those other block. So what I do is that I I go to the extreme other block. When I have three other block in a row, I always choose the extreme other block because the extreme other block is the safest place to be. So I have up to two other block here. I always stay at the extreme because according to my top analysis, the extreme other block uh, is the valid other block. Now we can see this market has an FVG. This is the FVG. This is the FVG. The market has an FVG. So and the market also has a liquidity, a trending liquidity. Like I said earlier, we have like two type of liquidity: a trending liquidity and a consolidational liquidity. A consolidational liquidity is when market is moving in equilibrium, and a trending liquidity is when the market is trending. So we can see that this is a downtrend liquidity. So now this is my FVG, this is my other block. What I can do here is just to sell. And whenever you are in the market, always target the reversal point. Like I would love to, this is the reversal point, but I would love to target this place because that is the area of a resistance level. When the market get there, that line will surely push the market back up, upward, just to make my emotion safe, not for the market to touch with my emotion. No, now I have to put my TP around this place, then set the stop loss above a little bit. This my other block. I have to set my stop loss a little bit above my other block. You can see this trade is giving 1 to 5 weeks reward. This is a very good weeks reward. So that is all about uh that's all about this trade. Now let's let's check, maybe you can see some entry on US 30, because US 30 one of my favorite pair. This is US 30. No, like I said earlier, let's do some top down analysis on this trade. I do my top down analysis on the daily time frame. Do my top down analysis on the daily time frame. If you can see this trade, you can see without anything, you can know that this market is a downtrend, and this is an other block from the daily time frame. You can see this is another block from the daily time frame, which actually leads to an impulsive movement to the downside. So the other block is currently not reacting to anything, but this is a support level. But the other block is not reacting to the support level yet. So this is another block to the downside, right? So what I will do is that I've marked out um, my key level from the daily time frame, which is my other block from the daily time frame. Now I have to go back to the 4 hours time frame. This is my other block at daily time frame. Going back to the 4 hours time frame, you can see the chart look more details in the 4 hours time frame. So I have to adjust my other block to fit in the 4 hours time frame. You can see to fit in the 4 hours time frame, as this market is still bearish. So now I have to move to like 2 hours time frame to check some validation in the 2 hours time frame. So as we're going down according to the time frame, so we have to adjust our other block. We have to adjust our other block to always fit our current, the other block in our current time frame. So this this is my other block, because the reason why I choose this one as another block, because this other block actually clear a previous liquidity and also form a little bit of a fair value gap. No, now I have to come down to my 15-minute time frame. I have to come down to my 15-minute time frame where I used to find my entry levels. According to my 15-minute time frame, you can see around this place. Let's map it out from this area. You can see this is a breaking of structure to the upside. Maybe we can see entry in this trade. This is a breaking of structure to the upside. Then after the breaking of structure to the upside, the market actually changed character around this place. The market changed character around that place, around here. So what leads to this changing of character? We can see another block above here. This is a valid order block that leads to this changing of character. On the normal ground, the market have to supposed to reverse into this zone. Market supposed to reverse from this area into this zone before it moves downward, but it fails to do that. So that is a miss entry. So now we have a changing of character. This is the other block that leads to the changing of character. So now we also have this a breaking of structure, a tiny breaking of structure, and also a breaking of structure around this area. Now so we have to make this other block to fit. We have to make this other block to fit the other block in our current time frame. So after this, we map out the changing of character and the breaking of structure. And you can see that this other block around here, has breaking of structure. It has changing of character, so it leads to changing of character. And a valid other block must have a changing of character, as also must have a breaking of structure. Now, this other block here has a changing of character. It has an FVG, also has a liquidity. Like I said earlier, we have an inducement in the market. I'll be marking this out as my inducement zone. You can see this place look more like another block. It look more like another block, and that is my inducement level. Inducement used to trick trader into the market to believe it's a real order block, and when you enter there, it just give you a little bit of profit. Inducement will just trick you to enter the place. It give you a little bit of profit, then clear you off, then go to the main order block and give you the massive food CP. So now I'm marking this place as our inducement. That's another block. So I will be taking this trade. I'll be shorting this trade from here. I'll actually be entering this trade as a short position. I'll be entering from that area. Please stop loss a little bit above, a little bit above, just a little bit above my other block. As you can see, this trade actually, if this trade goes well, it give us 1 to 12 weeks to reward, which is very good. Like I said earlier, we must always set our full TP at our reversal point. So it must be at our reversal point. Now, so what I can just do now is that whenever I see the market that break around, whenever the market breaks, I won't tell you to do that right now. Whenever the market breaks around this area to the upside, that will lead to a changing of character to the upside. That means the market has changed its position from the bearish state into a bullish state, which means the market has changed character to the upside. Whenever I notice that, I can look for another block. Maybe any other block has led to that changing of character around this place. whenever I see this other block, I can enter and counter trade to the upside. So I can just counter trade. Whenever I'm counter trading, I usually target very low risk to reward. I usually target low profit and maximum profit of 1 to 2 weeks to reward. That is what I usually target when I'm counter trading. So, and this is all we'll be doing today. Maybe see you later. Make sure you subscribe to this channel. So whenever I want to go live again, we can see our notification. Thanks.